as also someone like Shreevar Kheruka, MD at Borosil, would also be very happy about this GST rejig which the Prime Minister has proposed. Mr. Kheruka, hi, morning. Good to have you on ET Now. I know we called you to talk about your earnings. We'll talk about that in a little bit. But if the rates do get rejigged and if consumption does get a kicker, even you will benefit, won't you?
Yes, absolutely. Well, thanks for having me. And we're pleasantly surprised to hear Modi ji say, make this announcement on the 15th of August. And we believe that consumption needs a little bit of stimulus. We already had a tax break earlier this year. And with the GST rates, if they rationalize, I think that's definitely going to be a positive sentiment for consumption. We have seen, a few quarters, in fact, of muted consumption growth. And both these policy initiatives should really change that, we hope.
Absolutely. But tell me a little bit about your numbers as well, Shreevar. What was the quarter gone by like and what's the visibility going forward?
Yes, so the quarter, as I just earlier mentioned, was muted from a growth perspective. We had only about a 5% top line growth, which is probably the lowest in almost 15 years if you exclude the COVID, the first quarter of COVID. So it was a challenging quarter, no doubt. There could be many reasons for it. However, we see a pretty, strong bounce back in Q2. I do believe that our long-term growth targets, which we had set for between 15 and 20% CAGR, I think we'll be achieving that this year as well. So we are quite bullish for the rest of the year. Things seem to be shaping up quite well. Also, the monsoon season has been good so far, plus Diwali is a bit earlier this year. So we anticipate a very strong bounce back in demand. And obviously, policy initiatives, as already discussed, are going to be adding to that.
Sure, Mr. Kheruka. Hi, morning. This is Nehi joining in. Give us a little insight on what your segmental performance has been this time between glassware, non-glassware, and your opalware. How are all of them doing?
So if we look at them from a growth perspective, the non-glassware, which is basically our stainless steel products plus our home appliances, this has had a very good growth. It's grown in double digits even in this quarter. And that's on the back of, lots of new product introductions, as well as, more distribution penetration, because that's a segment where we're least penetrated across, all our three segments. So, that's, and we're going to see a few more years of that as our penetration increases. As far as glassware is concerned, while the growth has been kind of flattish, the benefit has been increase of sale of tonnage, which means that we've been selling more pieces. The product mix has changed a little bit, and therefore the revenue growth hasn't reflected the volume growth. So the volume growth has actually been double digits as well, but the revenue growth has been flat on the glassware front. As opalware has had the toughest quarter again in recent memory, and again I think that's because of maybe lack of marriages or the gifting opportunities have been fewer this quarter than the same quarter last year. Over and above that, we have the pharma. A lot of pharmaceutical companies used to gift in the first quarter, and that's also taken a step back because of gifting guidelines are made by Government of India for pharma.
Sure. Shreevar, the last time that we were talking to you, you were also talking about how you're intentionally planning to and intending to reduce your dependence on China as well, right? By expanding more when it comes to your Indian-made and Indian manufactured portfolio. Where do things stand as of now?
Yeah, I think that's been a real good success story for us. So of our three segments, opalware and glassware now is 100% non-China dependent. And I would say 90%, opalware is 100% made in India. Glassware is 90% made in India, with the balance 10% coming from non-Chinese, sources. So both these categories have been, remarkable success in terms of indigenization of production. As far as non-glassware is concerned, we are setting up a new facility in India for making stainless steel bottles, which will get, or flasks, I should say. This facility is going to get commissioned by the end of this year. And, that will mean 100% again in the indigenization of the entire flasks portfolio. And then finally on appliances, which was again earlier maybe 90-95% China dependent, we're down to 45% China and 55% India. So overall, it's been a very good success story, I would say, in the last 2, 3 years, this move to Make in India. And my anticipation is in the next 24 months, we will be 100% made in India, at least have the option to 100% make in India. We can always import some products from outside, but we would no longer be dependent on any imports for our growth as well as for our profit margins.
Okay, so that's the take on that front. But also the last time we were interacting, a key thrust area for growth that you had identified last time was domestic appliances. Where is that segment headed, and any new capacity expansion on that front, or maybe new launches in the pipeline perhaps?
So as far as appliances are concerned, we don't actually manufacture any appliances. We work with some exclusive and as well as non-exclusive manufacturing partners. So there's enough capacity on the front to satisfy our demand. We have seen a very good growth in appliances, as well as if you look at after sales service, we've been investing a lot of money in expanding our after sales service footprint. That's also leading to a lot of positive customer feedback. So we do see this as a long-term growth opportunity for us. At the moment, there's no plans to manufacture appliances because we believe that our partners are more than capable to do the same. But of course, things can change quickly.
Right. Okay, absolutely. Things can change quickly, and here's to things looking up, Shreevar. Thanks for your time today.